Hello and welcome to the Energean Full Year Results 2019 Analyst Call. Throughout the call, all participants will be in listen-only mode, so there's no need to mute your own individual lines, and afterwards there'll be a question and answer session. Just to remind you, this conference call is being recorded. Today, I'm pleased to present Mathios Rigas, CEO, and Panos Benos, CFO. Please begin your meeting.
Thank you all for joining. We'll be running through a slide deck this morning, which can be accessed via WebEx for those of you on the internet. The link is in the press release. You can also access a PDF of the presentation by going to energean.com/investors. If you still don't have a copy of the slides, please email Emily, EMILY, .hall, HALL, at Camarco, camarco.co.uk. I shall now hand over to Mathios.
Thank you, Billy, and good morning to everyone. I would like to just note that we have with us, except from myself and Panos Benos, Steve Moore, our Technical Director, and Nick Whitney, our Commercial Director, that will be also covering part of our topics today. So, in these very challenging times, where the COVID-19 pandemic and the OPEC plus price war has been hitting our markets and presenting big challenges to all of us, especially in the oil and gas sector. As CEO and the second largest shareholder of this company, I'm asking myself every day that I wake up, how is COVID affecting our business? How is the oil price war affecting our business? And what is the liquidity situation that we're faced with? And in this, I will turn to page 3 of the presentation for those of you that have access to it. And the key messages that I would like to give to everyone today around our business. Number one, our main flagship project, Karish, remains on schedule. The FPSO, our hull is leaving China in the coming weeks, as planned, in a couple of weeks. And we have not seen any delay from COVID-19. We were fortunate that we continued working in China over the Chinese New Year with 600 workers, so we have seen no impact from what is happening with the virus. And more importantly, in Israel, we completed drilling of the development wells and confirmed the capacity to produce 800 million scuffs a day, or the 8 BCM capacity that we have on our FPSO. So project is on track without any impact for the time being from what is happening around the world. Second message around our major transformational acquisition of Edison. The deal remains on track, closing anticipated within 2020, and we have now agreed a price with Edison for the Algeria carve-out that has delayed us. It's an effective price of $155 million, which is broken down in $55 million of cash flow in 2019 and $100 million from the effective date of 2020. So the Edison deal remains on track and obviously we are reviewing the situation right now. We are discussing with all the partners, and I'll come back to this a bit later. Third key message for today, exposure to oil price volatility. I remind everyone that about 70% of our production over the next 5 years has been already sold under long-term gas contracts with pricing mechanisms that protect us against commodity price volatility. So we are affected as far as our liquid is concerned, but the majority of our business is very well protected. Fourth key message today is that all our projects are fully funded, because we raised the money a long time ago before the crash of the market, and we retain significant discretion over capital expenditure. So we not only have the flexibility, but we have all the funding in place. Beyond that, earlier this week, on Monday, we signed an extension of our project finance facility in Israel of $175 million, just to have extra liquidity to weather the storm or weather any eventuality that we haven't yet foreseen. And in this environment, raising $175 million when most of the banks are looking at restructuring loans or problematic situations proves the strength of our relationships with the market, the strength of our project in Israel, and gives us a very nice comfort to weather any problems that we may face. Last point that I want to start with is a very strong balance sheet and our liquidity situation, where our group cash position at 31st December 2019 was $354 million, and undrawn facilities of close to $500 million gives us the liquidity we need. Again, if we add to that the $600 million that we have for our acquisition of Edison, we have all the funds we need for all our projects. So everything remains on track. Our business, obviously, we are working from home, and we are following all the rules and precautions that governments require us to take to avoid problems with COVID-19, but our main businesses remain on track. Now I will turn to page 4 of the presentation, because I would like to go over the key milestones to remind people what we achieved in 2019, which was a phenomenal year for Energean. We increased our 2P and 2C reserves and resources to 558 million barrels of oil equivalent a day, excluding, obviously, any Edison reserves and resources. We signed the agreement to buy Edison at a very good price, and we raised the funding required for it back in July. We made a major discovery, Karish North, which we have estimated to be at about 190 million barrels of oil equivalent. We are working on the CPR that will be available towards the end of March, and we believe that the numbers will be even further improved following the technical work that we are performing as we speak. Our Karish project continued its progress, its excellent progress, and it was at 72% completion on the 31st of December 2019. We drilled 3 development wells and confirmed, as I mentioned earlier, the deliverability of the full capacity of the FPSO if we're able to sell more gas in Israel and the neighboring countries and get to our target to fill the boat. We signed 1.4 BCM a year additional firm GSPAs. This is on top of what we had before, to reach a total of 5.6 BCM per year, firm gas contracts with long-term take-or-pay provisions and floor prices that protect us from the volatility of the oil price. On the HSE front, we achieved more than 5 million man-hours of without lost time incidents in China, a very big achievement. And finally, last but not least, we have said many times we will remain capital disciplined, and we reduced capex in Greece. That proved to be, again, a very correct decision, given what is happening today with oil prices, retaining our liquidity for projects that have higher returns for our shareholders. I would like to turn to page 5, because 2019 was a year that was dominated by discussions on ESG. Obviously, today, this is not the priority anymore, but we remain committed to our net zero emissions target by 2050, and we have a very firm program in the next 3 years to reduce our emissions by 70% through actions that do not require major capital investments. These are all projects that we're working on, the acquisition of Edison and the startup of the Karish FPSO brings us to very low levels of carbon intensity, and we will obviously continue our program to get to net zero. This is a very important matter for us. We continue our business despite what is going on right now in the oil price markets and COVID-19. Energean remains a company committed to be a gas producer in the Mediterranean, with ESG very high on our agenda, and with the strong elements that I mentioned earlier. I would like to hand over now to Panos to go through our financial results.
Good morning. Following up from Mathios, the 2019 results are dominated by, obviously, our agreement to acquire the Edison E&P assets, as a successful 265 million equity placement in the summer, and our decision to prioritize our capital allocation to our gas assets and defer investment in our oil asset in Prinos. I want to remind everyone that our agreement with Edison is working on the basis of a lockbox date of 1st January 19. That means, obviously subject to successful closing, that we have the economic interest since that date. In addition to that, I want to remind everyone that since the agreement with Edison, we have agreed to sell the North Sea assets to Neptune. And as Mathios mentioned, we have an in-principle agreement with Edison to carve out the Algerian assets for 155 million. So in our results, we have tried to demonstrate the combined business. As you can see, in 2019, the combined business delivered more than 55,000 barrels of oil equivalent, revenues in excess of 500 million, cost of production that in those times becomes more and more a focus, is at around $10 per barrel, and the healthy EBITDA and operating cash flow numbers in excess of 250 million. The capital expenditure, even on a combined basis, is dominated by the Karish Tanin project, which is the focus of the group, and the capital expenditure, as you will see, for the next 12 to 24 months. Next page, 8. Our guidance for 2020 stays as it was regarding production at 42 to 50,000 barrels of oil equivalent. Operating costs, we are confident we will keep them close to $10 per barrel, demonstrating the low-cost basis of our portfolio. Our G&A, again, we're confident we will stay south of that number of 40 million. We are reducing our capital expenditure by 155 million in total for the time being. We have room for further deferral if needed, and that demonstrates the discretionary nature of our portfolio. The only thing that is not moving, and we're fully committed, is our Karish project. Slide 9, again, a slide that reflects the limited exposure to oil price. As we mentioned before, 70% of our production the next 5 years is dominated by gas revenues, which are underpinned by fixed long-term contracts. In Israel, an average floor price of $4.2 per scf. In Abu Qir, 3.7, protected down to $40. As I'm sure a number of you are already asking, the equivalent price at $30 is just above $3, and at 25, it just goes south of $3 at 2.7, 2.8. The NEA development has a fixed $4.8 per scf contract price, all of them secured for the field life of the assets. Again, an important point that I feel differentiates us in this environment is our extremely strong position that we're entering what seems to be a very interesting start to the year, an extremely volatile start to the year. We're entering the year with a net debt position of just over $550 million. What I would like to clarify here is that our debt position is dominated by the project finance facility we have in Israel. This is a non-recourse project financing, very typical for greenfield projects like Karish. As Mathios mentioned, we recently agreed a 175 million upsize, which demonstrates the robustness of the project and, of course, the confidence and the commitment that both us as a sponsor and our lenders have in this project. The rest of the group enjoys a net cash position in excess of 80 million, with cash at bank in excess of 244 million. Our facility in Greece with EBRD currently stands at around 145 million. The intention, and we are in advanced discussion, this to be refinanced by the global RBL we're currently putting together for the Edison acquisition. The current numbers we're looking at is roughly 500 million RBL to cover both Edison assets and Prinos. Slide 11, again, trying to focus on an ability to push and defer CapEx in the rest of the portfolio. The only thing that we're not in a position to move as a choice is an Israeli project where we are fully funded through equity injected already in the project, as well as the commitments from the banks that currently exceed $600 million. Non-discretionary CapEx sits at 115 million at the time. We feel that if we need to, we can further defer that CapEx and move another 50 to 60 million if we feel like it. For the time being, the projects that we have, we still keep as firm is the NEA sanctioning, which again is a gas project with $4.8 secured. The Abu Qir infill projects, infill drilling, and some minor Italian projects that we consider mostly to be maintenance of the current production type of expenditures. I will leave you with a last slide to demonstrate the three projects that dominate Energean's focus and portfolio going forward. We have tried to stress case those economics to much lower oil prices. Those economics and net cash flow margins do not really change much even if you go at lower oil price environments, because again, we are protected with the gas contracts we have in place. What I would like to demonstrate that the 40, 45% and 50% net cash flow margins you see here are further enhanced by the satellite projects that are not included here, which in Karish includes the Karish North tieback that we are in the process of submitting a field development plan. In Abu Qir, the NEA development that enjoys much higher gas prices. And a few words on Cassiopeia. It's a project that Eni is the operator. It's the biggest gas field right now in Italy. And we expect right now first gas end of 2022, beginning of 2023.
I would like to turn now to a few more details about where we are with the Edison deal. We are committed to the deal, Edison is committed to the deal, and Neptune is also committed to the deal. We're obviously all together looking at the situation right now and evaluating the market conditions to see if we need to make any adjustments. The first agreement that we've made with Edison is the carve-out of Algeria. As I mentioned earlier, $155 million has been agreed. Italian approvals are expected in the very short term. Obviously, there are other priorities in the Italian government at the moment, but they should be coming very soon. Algeria is expected to approve the carve-out in the next 2 months, and they will follow the process because they have to even approve the transfer to an affiliate of Edison. The on-sale to Neptune will take place simultaneously with our closing, with a long stop date of December 2020. The deal size, as Panos mentioned, with the various sales to Neptune, to the carve-out, the cash flow that we've enjoyed from 2019 has significantly reduced and makes this a very attractive deal even at today's price environment. I will turn to page 16, which shows the history of our growth. We are an 80% gas company today and achieved a 40% growth in 2P and 2C reserves and resources, 2C resources in 2018 and 19. This was driven primarily by two discoveries, the Karish North discovery in Israel and a discovery of a deeper horizon in the Epsilon field in Greece. So we continue our path to growth. We continue with the acquisition of Edison. Obviously, that takes us close to 800 million barrels of 2P and 2C reserves and resources. And if you look at this chart, back in 2015, when the oil price was 27 and we had similar challenges, that was the year that we acquired Karish, took advantage of the opportunity, and that moved us to the growth phase that we've enjoyed the last few years. The same happened back in 2005-06 when we bought Prinos and started the story that you see on this slide. Undoubtedly, we will continue, and we will continue with our focus on gas and the Mediterranean. I'll turn to page 17 for a snapshot of production. We group Egypt and South Mediterranean as an area of focus for us. 2019 actual production of about 60,000 barrels of oil equivalent. We are performing better than what we had guided in the first 2 months of the year at about 52,000 barrels of oil equivalent a day. Obviously, there's a decline in the gas field in Abu Qir. We haven't yet taken over the management of the asset, and there's a number of activities that we will talk about later that we have planned to improve the production in Egypt. And obviously, when we bring in the project in Israel, production will be getting closer or north of 130,000, 140,000 barrels of oil equivalent a day. In Israel, and I'm now turning to page 19 of the presentation, I want to remind people that have followed us for a long time, but also inform the newer comers to the story about the business in Israel. It's a material reserve and resource base with an EPCIC contract that minimizes the development risk. A lot of people have asked me about the force majeure note that we got from Technip. This was issued, and I fully understand the reasons for it, to protect our main contractor for what has been happening from COVID-19. As I mentioned earlier, we have not seen any impact from COVID-19. The hull will be leaving China in the next couple of weeks. Our commercial structure with GSPAs minimize commodity price risk, and we are in a growing domestic market where the government is fully committed to switch from coal to gas, and demand for gas is rising significantly in the Israeli economy. Our cash flows are long-term and utility type, I would describe them, once we start producing, with a fully owned infrastructure that gives us great operational flexibility and allows us to add to our main project satellite developments like Karish North at a very low cost. We're fully funded, and we have a material prospective resource base sitting around us to allow us to drill more wells, find more gas, and continue the growth of our sales in the country. In terms of, I'm turning to page 20 of the presentation, in terms of the schedule, 3 main work streams. The FPSO, I repeat again, because that is a key milestone for us, leaving in the next couple of weeks. And then for the remainder of 2020, in Singapore, we will be doing the integration of the topsides. 2021, the hull, in the beginning of 2021, the hull will, the FPSO will sail from Singapore to Israel for hookup and commissioning, and first gas is still maintained as the first half of 2021. The second work stream for us was drilling. We completed not only the 3 development wells, Karish Main 1, 2, and 3, and tested them at fantastic rates. The first 2 wells confirmed deliverability of 300 million scuffs a day. These are world-class wells, and the third one is being tested as we speak. But we also drilled Karish North that made the discovery that I described earlier. The drilling rig will be demobilized over the next couple of weeks, and we have decided to postpone the Zeus well to preserve capital for later. We believe that we will have a larger resource base in Karish North that allows us to continue our gas sales efforts. We will confirm that obviously later in the month when the CPR is published, and that allows us to continue selling gas to the Israeli market. The last work stream is the subsea and the onshore work streams, which are starting in May and are expected to be completed by the 4th quarter of 2020. And as you can see here, obviously the critical path goes through the FPSO which remains on track for our delivery of first gas in the first half of 2021. Page 21, just a picture of the hull as she looks today, ready to sail away from China to Singapore. It will be there in the next couple of weeks, as I mentioned. I'll hand over to Nick to take you through our gas sales agreements in Israel.
Thank you, Matthias. As Matthias has mentioned, we have a strategy in Israel which we call Fill the Boat, very much focused on maximizing the utilization of our investment in this key bit of infrastructure in the region. Since FID, which we took at approximately 4.2 BCM of plateau production on our gas contracts, we've increased that over the last year to what will be by the end of this month 5.6 BCM per year. This is built on totally utilizing the existing 2P and 2C resources of Karish and Tanin, and then adding in what we expect to be an excellent result on the CPR for Karish North. So this will bring us up, as I said, to 5.6 BCM per annum plateau production, and give us further scope to continue to selling into a market which is still demanding our product. To reiterate, our contracts all have very robust take-or-pay provisions at fairly high levels and flat fixed dollar floor pricing. So they are robust against oil price downsides. The take-or-pay gap to peak production is quite narrow. So as I say, this is a quite efficient use of the FPSO capacity. There are no price reopeners in any of the contracts. So those prices are firm depending on no matter what happens with the oil price. And our counterparties, to date 15 counterparties, are some of the largest listed and private industrial companies and power generators in the Israeli market. Most of our Israeli investors will be familiar with a lot of those household names. So we look forward to moving on at the end of this month with the CPR in our pockets to continue to sell into a market that wants our product. And as most people will know, there are active tender processes around IEC and desalination plants ongoing at the moment. So we hope to produce some good news from those in the coming months.
Thank you, Nick. I'll turn to page 23 because this is not just about what we have discovered to date and what we've sold to date. It is also about the future and our growth. We are fortunate to have secured some very high quality acreage around the main Karish and Tanin blocks. I start with Block 12, Zeus and Athena, two wells that have been deferred to 2021, wells that have a 70% probability to find gas, and these are wells that we will drill in the coming years in 2021, depending also on how we see the demand for gas in the region. Block 22 and 31 also have some very interesting structures with more than 1.5 TCF of prospective recoverable resources with a very high probability of success. And the 4 new licenses in Zone D that we secured in the last bid round in Israel gives us all the resource base that we need to continue our growth in the East Med. And it is important because we see the East Med as an area that will continue to demand a lot more gas. And with the FPSO being a central part of our strategy, we have the ability to hook up and connect all those near field targets at a very low cost and at fantastic economics. We'll turn our focus now to what we call South Europe. Italy, Greece, Croatia, and Montenegro. We group them together. We have Italy and Greece in production, and obviously Croatia at a smaller rate. We see production at around about 10,000 barrels a day. That will grow with the addition of Cassiopeia. And in Greece, Epsilon for the time being is on hold, pending the strategic review that we announced earlier in the year that we are performing for Greece. Towards the middle of the year, we will be firming up our plans for the project and our plans for the Greek producing asset. Greece and the Western Greece and the East Adriatic also give us room for growth. We have some very interesting acreage onshore in Greece and offshore in Montenegro. The key message I want to give to everyone on page 26 is that we have minimal commitments. We have no drilling commitments on all our exploration acreage in the East Adriatic. These are blocks that we have either performed already the seismic commitments we had, like the Ioannina in Greece and Montenegro, and have seen some very interesting structures. We have drill or drop decisions, but we have no commitments. We recently acquired Block 2 from Total, a very interesting deal for us, where Total paid us 1.6 million euro. That more than covers the financial obligations to take over a very interesting block in the deep waters of Greece. Egypt, I'll turn now to page 28. Production in Abu Qir, the main producing asset of Edison that will remain in our portfolio, has continued at better rates than expected for the first 2 months of the year. And we have an opportunity to drill 4 wells, infill wells in Abu Qir to improve and increase production. Again, CapEx here is fully discretionary, so we are evaluating together with our partner, EGPC, the plans. Gas prices here are, again, fixed at $3.50 per MMBTU for Brent price that is $40. Then you can see the scale on page 28. There is a 6-month lag on the reduction or the increase of the price. So we feel comfortable that we will have a very robust price over the coming months. In Egypt, we have a development of Neani, which is being evaluated at the moment by our Edison colleagues and EGPC. Development of about 50 million barrels of oil equivalent that would be tied back to the Abu Qir platforms at much healthier and higher prices that range between $4.45 and $4.6 per MMBTU. A very nice project, as Panos showed earlier, in terms of cash flow margins. Again, we have not taken the final investment decision. It's something that will be taken over the next months. In conclusion, and I'll turn now to page 31, Energean is turning from a resource base of 800 million barrels today, and we're turning that into production. We believe we will grow our production to more than 140,000 barrels of oil equivalent a day. I repeat, 80% of that is gas, underpinned by long-term gas contracts. And if we manage to fill the boat, as Nick said earlier, we can go up to 175,000 barrels of oil equivalent a day. Again, mostly in gas.
Our medium-term targets on a consolidated basis, you can see on slide 32, reflecting what we have presented so far. Our aspirations to get north of 160,000 barrels a day. We expect those targets to materialize to 2022-2023. Revenues in excess of 1.4 billion. Cost of production much lower than $10 per barrel at around 7.5. Our G&A should be around 30 million per year, and an EBITDAX in excess of 900 million. As reference price here, we're working on a $50 long-term basis Brent equivalent. We don't feel that those numbers are very sensitive to oil price, as we explained throughout the presentation.
So the near-term focus for Energean is, as we are doing right now, following our financial discipline and cost discipline, to cut costs and defer non-essential or capex that we don't have to spend right now. Second target is to get the FPSO from China to Singapore, complete our Karish North CPR and get the FTP submitted and approved, take a final investment decision on Neani in Egypt, close and integrate the Edison E&P transaction, deliver first gas from Karish in the first half of 2021, continue selling gas in Israel and the region to fill the boat, reach production of more than 140,000 barrels of oil equivalent a day, and reduce our carbon intensity by 65% in 2020 and more in the years to come. I would like to close this presentation before we open for questions and make a point that you are hearing a company that is very upbeat despite what is going on right now, because we were very well prepared for the storm. We have a portfolio which gives us the flexibility to move capex depending on the situation, and we have a capital structure that gives us tremendous strength and a very strong balance sheet that has been further strengthened by what I think is a unique achievement to get $175 million of new funding in this environment. And I think that is showing to everyone the strength of our relationship with our banks, but also that we prepare Energean always to be the safe haven for the sector with our gas contracts, with our long-term protection against oil price volatility. But this is not about only protecting the downside, it's also about growth. As Panos mentioned, we have line of sight to an EBITDAX of more than $900 million at a very low leverage ratio, with very low commitments on our portfolio, enabling us to look at the future with confidence and optimism, despite the doom and gloom that everybody is in at the moment. So I would like to thank all of you for participating today and open the floor for any questions.
Thank you. If you wish to ask a question, please dial 01 on your telephone keypads now to enter the queue. Once your name is announced, you can ask your question. If you find it's answered before it's your turn to speak, you can dial 02 to cancel. So once again, that's 01 to ask a question, or 02 if you need to cancel. There'll be a brief pause now whilst we register your questions. Our first question comes from the line of Robin Hoff of Stifel. Please go ahead. Your line is open.
Good morning. Thank you for the call. Good to hear. A few questions, if I may. So, just on the proposed RBL for the Edison acquisition, I was just wondering if you could let us know about the status of those discussions, and is it mostly the same banks that are involved in the Israel project finance facility? So, do you have the evidently strong relationships in place for that facility as you have done for Israel? Second question is on the extension of the Israel facility. Just wondering if you could talk through what the differences are mechanically between having an LC in place versus having an extended facility. And thirdly, just wondering if you are seeing any evidence from Technip that they are needing any kind of enhanced payment terms and anything like that. And I've got some others, but I'll leave it there. Thank you.
All right, let me take those, right? Regarding the RBL that we're working to put together for the acquisition financing, yes, we're working with our core relationship banks. Specifically, these are the banks that were involved in the bridge facility. In addition to that is Natixis and Deutsche Bank. We have credit approvals for the time being. The carve-out of Algeria needs to be reflected in the documentation. We need to test the debt capacities under the new price deck environment, and we expect in the next couple of weeks all RBL banks to be firming up their new price decks. but given the gas-weighted portfolio, even in the global RBL, we don't anticipate any material adjustments. In terms of the project financing, the upsize can be used for issuing letter of credits. If we need to use that for issuing letter of credits, that will be to accelerate or at least to monetize the payables that we will have from INGL. I remind everyone that we have sold 400 million, the onshore part of our pipeline to INGL. Those LCs give us the chance to monetize that earlier if we need to. Again, it's only flexibility. As Mathios mentioned, the reason for that is to maximize flexibility and the funding strength of our project. The last point was, I think, about Technip. Technip so far is committed to the project. We have a very strong EPCIC that already has embedded credit terms. More than 10% of their payment is deferred into 2022 and 2023. So far, we have absolutely no visibility, or at least no knowledge of any need to increase our project costs. We feel more confident now that the drilling part is behind us. The bulk of the remaining capex is covered by the EPCIC now to get us to first gas. Of course, we will keep you posted as we did with the force majeure notice. If anything changes in this evolving environment, we will keep you all posted.
Thank you. Very clear. And just one more, if I may. You mentioned there are additional volumes up for tender, gas volumes up for tender in Israel in the coming months. So I was just wondering if you could kind of quantify that. Of the roughly 3 and a bit BCM that you have spare, how much of that do you think you could maybe fill in with 2020 tenders?
I think the two tenders that are active at the moment are first the Ministry of Energy and Water for the Sorok 2 desalination plant, which will require a small power station to provide energy to that. And there is the second of the series of 5 privatizations of the IEC gas-fired fleet, a station called Ramat Hovav. We are engaged with all participants in the market at the moment on both of those tenders. Obviously, depending on the risk approach of the potential bidders, the quantities of gas and the profile shape that they're looking for differ. Obviously, we can't go into too much detail on that at the moment because they're active negotiations. But you will note that we were successful in the last tender for Alan Tavor in reaching agreement with the winning bidder. So we will continue to compete assertively in these next 2 tenders. In terms of round figures of the remaining approximately 3.4 BCM, I'd say roughly we could sell or fill roughly a quarter of that within the next year from these active tenders. Potentially between a quarter and a third.
Great. Thank you.
Thank you. Our next question comes from the line of Michael Alsford of Citi. Please go ahead. Your line is open.
Morning all. Thanks for taking my questions. I've just got a couple really, just around the Edison deal. Thanks for the details in the release. It's very helpful. I was just wondering if you give us some sense here. You back of the envelope when I look at the outflow potential at closing, given the lockbox arrangement, it shouldn't be much more than about $200 million of cash outflow that you would need to do if you complete on the Neptune deal. I don't know if you can help to clarify that. And then just secondly, on the Neptune deal, would you still push ahead and complete on Edison without having that agreement going ahead and therefore keep the UK and Norway assets? Thank you.
Look, I'll quickly address your first point. Michael, you're right. You are in the ballpark. Obviously, we're entering 2020, but right now the cash flows that we see do not have any surprises. So you're definitely in the ballpark. If anything, I hope we will surprise ourselves and everyone with a number lower than that, but that's you're not far from that.
On your second question, Michael, what happens if Neptune is not there? First of all, I prefer to work with what is happening rather than hypothetical scenarios. Neptune is committed. As I mentioned earlier, we are discussing actively, all three parties, the current environment, trying to make sure that the deal makes sense for everyone. I remind you also that there recently has been a positive announcement about the Isabella discovery in the North Sea, which strengthens further the portfolio. So for the time being, everybody is committed. If things change, I remind also everyone that we are a Mediterranean player. We are happy to manage the portfolio if needed, but this would not be our core priority, so we would have to look for another home when and if this happens.
That's clear. Thanks very much.
Thank you. Our next question comes from the line of Colin Smith at Panmure Gordon. Please go ahead. Your line's open.
Yeah, thanks for taking my questions. I've got a few as well. Starting with Edison, could you just go through the critical path items and provide us a bit more clarity on the timing and what has to happen before that deal gets to closure? So that's the first question. Second thing is, can you just provide a bit more clarity about why the Epsilon project itself is on hold, given that the wells are in the reservoir and, as I understand it, the producing facilities are largely completed? I'm just not quite sure I understand why that's not being brought forward. And then finally, just with respect to the deferral that you've got on drilling, can you just talk a little bit about what that means with respect to the drilling slots that you had available and whether they will be preserved for future use and how that process works? Thank you.
Let me start with your last question, then we'll work backwards. We are going to terminate the contract with Stena, and the rig will be demobilized. It will go to Cyprus, most likely, where Exxon has a couple of wells to be drilled. Given the current circumstances, I do not see a scenario where if we want to bring the rig back or a rig back into Israel, we will have higher rates than what we have committed to today. If anything, I think there's going to be an improvement on rates. Deferral of the well has happened for two reasons. First, to preserve capital, which is our number one priority at the moment. And secondly, because we think that we will have more gas from Karish North, so we won't need to drill an exploration well right now. We have the luxury to defer it to next year when we will have more clarity on the situation. On Epsilon, the decision to put the project on hold for now is obviously related to the oil price scenario, and we still have a substantial amount of investment to make to complete the platform, the pipelines, the hookup, the commissioning, and the remaining wells that are required to bring the field into production. So again, being very disciplined, we prefer to focus on our gas projects, and once we have more line of sight of where the oil price will settle, when it will come back, because it will come back in our view, then we will be able to continue. In any event, with what's going on in COVID-19, the ability to move within Europe is restricted at the moment, so we would have problems to supervise the continuation of the project. So it has been a very, if you want, wise and conservative decision to preserve capital again. Going to your first question about the Edison critical path, as I mentioned earlier, Algeria now has been agreed. Edison has already requested the approval of the carve-out from the Algerian authorities, which has been approved by Sonatrach and now needs to go through the Council of Ministers. As I mentioned earlier, this will take probably 2 months. As soon as that happens, we are ready to go, since all the other approvals have been received. By then, Italian approvals will have been received as well. Egypt will be approved immediately following our EGM. That is the process that the Egyptian government wants to follow. I have no doubt about the approval of the Egyptian authorities. On page 14 of the presentation, I showed a picture where at the last Egypt Petroleum Show, global CEOs, including the CEOs of BP, Schlumberger, Apache, myself, met with President Sisi and Minister Tarek El Molla, and the relationship in Egypt is extremely strong. So I have no doubt that we will be getting the approvals once the EGM has been finished. The Egyptians want us to be absolutely certain that the deal happens. Then they sign the deeds of assignment of the assets to us. So couple more months to go, or a few more months to go, but we'll work through them and close the deal, as we said, within the year.
So just to clarify, if I understand it, what you're saying is that the Algeria sign-off, the Council of Ministers sign-off on the Algeria portion of the deal is the bit that unlocks everything else that has to happen. And if we assume that's in 2 months, when does the paperwork get issued, and when would the AGM be called for?
Right now, this can be run in parallel. So we are working on the new prospectus with an end date of 31st December 2019. We expect that to be issued, if not late April, very early May. Then we expect to be seeking shareholder approvals no later than end of May. In parallel, the Algerian carve-out will be going on. And as Mathios mentioned, the last CP outstanding will be the submissions of the deed of assignments to the Egyptian authorities for approval. This has to be the last CP after we have cleared all the other outstanding points. So you will be prospectus-wise. We expect and we target late April, early May to issue.
Because obviously it looked as though the guidance for completion had slipped a little bit. It was originally, I think, first half 20 was the endeavour, and now you're talking about 2020. But that still sounds like it's potentially doable by the end of the first half. Is that right, or will it have to be into the second half?
Colin, it is doable, but remember, at the moment, Italy is in total lockdown, so I'm building some buffer in the event that COVID-19 continues beyond what we all hope it will, and we have difficulties accessing Italian governments or other places. So it is doable, but we want to be conservative and realistic based on where we are right now in Europe. Again, I repeat that this doesn't affect us because the lockbox starts on the 1st of January 2019. So we are working very closely with our colleagues throughout the Edison organization to make sure that all the projects or the major decisions are taken in cooperation with us.
Okay, thank you. That's very clear and understood.
Thank you. Our next question comes from the line of Nick Lanone at Sefton Place. Please go ahead. Your line is open.
Hi, thanks for taking my questions. The first one, I'll ask them one by one. But the first one is just for the force majeure clause. Can you clarify? Does that, assuming the force majeure declaration continues, and assuming at the end of the day it's considered to be valid, does that only impact the time by which Technip has to complete the project, or does that also allow for changes to the price of the contract? So can they just say, we can only deliver 6 months later, or can they also say, and it costs another, however much more money?
Well, the force majeure note that was issued, as you have seen, has had no impact on the project schedule. So it was a force majeure.
It's a hypothetical question.
Yeah, but let's not about, let's talk about yeah, but I don't like to talk about hypothetical scenarios. Let's talk about what is happening right now. They issued a force majeure to protect themselves in case they needed to, and I expect that there are other suppliers maybe issuing force majeure clauses to them just in case. Now, there has been continued work in China and Singapore, and as I mentioned earlier, China and Singapore are right now outside the problems that we are facing in Europe. So work for the FPSO will continue in the yards without any issue. So I don't see a scenario where the force majeure has any impact on the yards. In Europe, where we have the subsea installations and the projects that we are working on, there are limitations of movement for people, but again, all the work is done offshore, so we don't touch the shores of Israel, and we're working around operational arrangements to get people on the boats to install the pipelines and all the rest. So again, there are difficulties, but we are working through them. Drilling is finished, so Stena is out of the way, and drilling is out of the way for the project. The local part of the project onshore is all done by Israeli contractors who are not affected at the moment by what is going on. So as of today, there is a note about a potential force majeure that could have an impact that we don't see in the project. If things change, of course, we will inform everyone about what is going on. Again, as Panos mentioned, the contract is an EPCIC turnkey contract that doesn't have price reopeners. What we are obviously looking at is ways to incentivize the CNIP and the yards to work faster to try to accelerate the timetable. So our focus is to deliver gas as soon as possible.
Okay. And perhaps one on Abu Qir. If I understood correctly, there's a 6-month lag in the Brent-linked pricing. So do you think you're aligned with the JV partner in the sense that if you can just see price is going to be bad for a while because the oil price stays low for some period of time, that you would just delay infill drilling until basically you could see that the price picked up again, or are there some practicalities that kind of prevent you acting that way?
Well, the way that JVs work in Egypt, they are 50-50 joint ventures with the government. So Abu Qir Petroleum, Edison, or we, once we close, have the ability to stop major investments and not take final investment decision. And that's why we said that it's a discretionary capex. Now, as far as the price is concerned, a drop or a continuous oil price in the 20s or 30s, yes, it does impact the price. Nick may want to make a comment on how much it does impact it. But it's still a gas project that has a very healthy price because it is a tie-back to existing facilities, so the capex is not big. Still, the cash flow margins, even at a lower price environment, are very healthy. So, like what we did in the past, when oil prices are very low, we managed to get contractors to reduce costs for projects. When we took over Karish in 2015 and the oil price was at 27, we managed to get the contract agreed with Technip at a fantastic price, and the same happened with Stena for the drilling rig. So being counter-cyclical when you make investments in this industry allows us to deliver projects at very low costs, very low break-evens that are able to withstand even very low prices. So the way we see this situation is that if the oil price continues to stay at 30, it is the best time to be running contracts and be ready producing the gas when the price comes back up.
Yeah, and as you mentioned, the price is calculated off Brent index on a 6-month rolling average, which some of you might remember from the old style of European gas contracts, which means that short-term reductions or increases in price are smoothed out. So depending on the length of this current oil price downturn, we may see very little effect at all in terms of Abukir revenues. Even if the price stays low at $30, as you could see from the slope in the slide, we're still talking about gas prices around $3. So a 15% reduction in revenues. But as Matthew said, if we accelerate or if we continue with the infill projects at expected lower costs, then the economic returns will still be very good.
Thank you. And there are no further questions in the queue at this time, so I'll hand back to our speakers for the closing comments.
So I'd like to thank everyone for participating in our results announcement today. I repeat, we are very confident, and we are looking at the situation right now from a position of strength, with a very strong balance sheet, with full discretion on our decisions. You all know that we are big shareholders in this business as a management team, so we are taking decisions based on what is good for all of us as shareholders, and we will continue to grow the business. We will continue to take advantage of opportunities, and we will continue to protect the downside to make Energean what our vision is, to be the leading independent in the East Mediterranean, with a portfolio focused on gas, and I repeat what I said before, ESG and our other softer targets very firmly embedded into our DNA. Thank you very much, everyone.
This now concludes the conference. Thank you all very much for attending. You may now disconnect your lines.